Hey, good morning traders and investors, and welcome to the TA Live Wednesday live stream show. I'm your host, Bennett Tyndall with tradinganalysis.com. Thank you guys for taking time out of your Wednesday mornings to join us, and Happy New Year to you all. We are entering 2022. My goodness, I'd like to joke that still waiting for the hoverboards that they teased us with in Back to the Future #2. So we'll see if we ever get our hoverboards. I think Elon might be the guy that could make that happen. So anyways, good morning. Thank you guys for tuning in. We appreciate it. Markets have been performing well to start the new year. We've seen quite the move up in the indexes from the December 20th lows. If you joined us kind of early December, I jokingly put out a chart of the Dow Jones Industrial. And the comment that I had at the time was, while I typically don't chart the Dow, when I do, it's to confirm uptrends. And believe it or not, the Dow Jones was one of the charts that really showed the December lows as complete and really suggested that impulsive uptrend would resume. And I do think we are facing that now. It's no surprise, no question that the Federal Reserve will be likely hiking interest rates 2, if not 3 times this year. If you look at CME Group's countdown to the Fed, currently pricing at about a 55% chance of a quarter point move into the March meeting. Today, we get the Fed minutes from the previous, so the December meeting. Very curious to see how those read. But for the time being, we're going to continue to push the hard right edge of the chart and look on the long side of the market, because while I do see maybe end of Q1 or maybe even out to end of Q2 of next year, I see the potential, just based on the charts, for a larger 10, maybe 15% correction. That correction might not even visit current levels, provided my current upside fib objectives are met. So we'll get to the charts in just a minute. Before we do so, let's bring in the trading analysis team. Morning, Terry. Good morning, Alex. How are you guys today?
Morning, Bennett. Morning, Alex. Morning, guys.
Hey.
What's happening? You guys having a good New Year so far?
Oof.
Yeah, we got yo-yo weather down here in Texas. We had a hard freeze this weekend, and now it's going to be back up to 76 degrees today. So,
No, I hear that. What about you, Alex? Are you still getting any snow?
No, it's 13 to 14 Celsius degrees here, so sunny. Last couple of days, no trace of snow yet.
Good, good. Glad to hear that. Glad to hear that. Yeah, I tell you what, come New Year, it's like somebody flipped a switch here in Texas. We had like 68-degree lows into like the 30th and the 31st overnight, and then the first day of the new year, we got down to 21.7 where I live here just outside of Austin. Incredible, incredible. Yo-yo weather for sure. Terry's onto that. So hey, we're going to take them through the charts here. We will be back in just a few moments. We'll take you guys through the Optima platform, take a look at sector rotation. We will then move into macro with Alex. He'll touch a little bit on cryptos. And of course, if you're interested in crypto-specific coverage, we do have Crypto Lab every Thursday, 9 a.m. Eastern on the same YouTube channel here. So team, I'll be back on the other side. We've got about, what do we got? 36 minutes here till market open. Futures are sideways to lower, but mostly trading into yesterday's closing range. So team, I'll be back on the other side, and we'll go from there. Sound good?
Sure.
sounds good.
All right, I'll catch you guys in a few. Good morning once again. We appreciate you guys tuning in. If you are enjoying the content, we would ask that you subscribe with notifications. All right, taking you into the hard right edge of the Motive Wave platform, let's take a look at the Elliott Wave interpretation of the markets. Now, going into the end of 21, we did see a fairly interesting corrective trend set in the indexes. And what we saw was actually just a continuous string of three-wave structures. And this is essentially a combination of corrections as opposed to the overall wave being a single corrective pattern, such as a zigzag or a flat. So in this instance, we see a series of three-wave structures. And if you want to label this A, B, C of W, there's some there's a valid way to label this initial W wave structure as a three-wave move. It doesn't matter. The overall implications are the same, and we continue to celebrate that even as we suggested we could break south of the 50% low, retracement low in the NASDAQ. And the bigger takeaway that I suggested we all celebrate is the fact that price action from that November 22nd high was very corrective. This was not a trend establishing move. So while we were up against some resistance of interest, the structure suggested the resolve would be on the upside and take us into new highs. So looking specifically at the NASDAQ for starters, because I think the NASDAQ right now is the most straightforward of Elliott Wave counts in terms of determining when and where we could see a rally back in growth. Looking at the move from the 22nd into the 20th of December, we've got a three-wave structure. Notice this met a 50% retracement in nearly price and time into the same candle. We then rally higher in 5 waves, correct lower in a motive diagonal, retrace a 61.8% move of that decline. The structure into the January 4th high was a 3-wave measured move, as you can see represented here. And then yesterday, we got a move down to equality of CNA. So this is referred to as a measured move correction. The secondary decline was equal to the initial decline. If this is the case, and wave 2 is truly over, it was a fairly shallow overall wave 2 retracement. It netted about a 38% retracement of the move from the December 20th low. And while that is typically somewhat short, it does satisfy the requirements to be of a wave 2 degree. And notice it was more or less equal to the wave 2 correction that we had coming off of the October 4th lows in the NASDAQ. If this is the case, we can now use a break above 16,513.87 as a bullish trigger point. A break above and a close above that would suggest to me as an Elliottician that this wave 2 is over and we're going to continue to see the remainder of the 5-wave structure unfold. Alternatively, if we were to continue to move lower, then chances are the bounce back from yesterday's low is just waves 1 and 2 of this C wave. So I'll go ahead and bring in the C versus A fib relationship here. You can see the clear bounce that we had yesterday at the equality level. So far, we're back into about a 50% retracement of that decline. So it's pretty straightforward from here. If we break above 16,513.87, I would begin to view this as complete. And in the event we start to break lower, I would look for support to come in the wave 2 retracement cluster, somewhere between the 618 and 50% retracement. What's interesting about the 618 and 50% retracement levels is that would take us closer to the broken downtrend resistance line. So if you simply take this November 22nd high, draw a trend line through the X-wave high on December 9th, you'll notice on December 15th, when we got that big intraday rally on the Fed meeting, that particular trend line was of significance and it did act as resistance and yield a move into a new low. From there, on the way back up, December 22nd, you can see the interaction with that trend line. We consolidate, but we ultimately break above it. You don't always backtest these broken downtrend levels, but it would be a zone that if we were to move into, I would confidently execute a trade into that cluster. So that's the NASDAQ. I had a question about the flat alternate. Is this valid? It is valid, but when we conduct cross-market analysis and we dissect the wave counts of the stocks that make up the index, it would suggest that this isn't the case. But again, as a back of the pocket, 10%, 15% possibility, if we were to break south of the December 20th low, I would still continue to celebrate this overall move as corrective and continue to look for the resolve back on the upside. Okay, just checking messages here. Yeah, exactly. And this used to be resistance. So if we could turn it into support with that retracement level, it would be of significance. Let's take a look at the S&P 500. So moving to the S&P 500, we don't quite have as clear of a wave count here. The wave count is certainly impulsive in our opinion from the December 20th low. But in terms of determining when and where the wave 2 correction is over, we don't have that clear confirmation objective that we had in the NASDAQ. So here in the S&P 500, zooming in on the 1-hour chart, we can see again a complex move into the December 20th low, 5 waves up. We had beautiful relative strength divergence in wave 5 compared to wave 3. We moved down in 3 waves, We moved back in 3 waves. So believe it or not, the S&P 500 opened up into a new intraday high yesterday, and then we got to move down. You might be looking at this chart and thinking, well, what if the NASDAQ, what if the original scenario you discussed and the NASDAQ unfolds and yesterday's low really did complete the correction? If that's the case, then in the S&P 500, it's fairly straightforward what the wave count is. The wave count in the S&P, if that were to be the case, would take that first 3-wave move into January 3rd, and that would be your wave 2. I don't quite think we're there, but I do think that we are well on our way towards the 5,000 initial objective for 22. So let's take a quick look at bonds and yields. We've seen a move up in yields as of recent. And if you've been tracking our work, I brought this up early in the month. We were looking for a continuation move lower in TLT, which is the 20-year bond ETF. We'll be keeping a very close watch on the yield dynamic and, of course, the rotational dynamic that we see in Optima, as I do see going into 22 a very similar overall setup to what we had going into 21, which did spark a value rally. Perhaps we don't get that value rally until later in the year when the indexes see the correction, but allow me to pop you over into the Optima platform just to illustrate. So this was September of 2020. We can see the S&P 500 as the benchmark, IVE being the S&P value ETF, and IVW being the S&P growth ETF. What we had seen was a move for value, or excuse me, for growth that came out of the leading quadrant. This was April of 20. We moved down from the leading quadrant into the weakening quadrant. Notice just as we break kind of through the threshold, we do start to see a decrease in the rate of change. So the markets kind of say, wait a minute, are we really going to see value pick up rotation here? And then September, we kind of see the IVE and the IVW playing chicken with one another, as I like to joke. Markets were kind of in a bit of a decision point, and we get a value rally. Just as we approach the threshold, this was January of 21, where we see the IVE moving from improving towards leading, and we see the IVW growth moving from weakening towards lagging. We get a rally in value. Notice just as value crosses into the lead, markets say, I'm not quite sure about this. They both take a charge right for the benchmark threshold. And in end of February, we get a big move up in value. And then mid-May, Terry started to pick up on the rotation back into growth. And he was all over this rotation, did an excellent job of guiding us through that. Then we get the move back up in growth. You can see the IVW moves into the lead. And here we are once again, kind of similar September, October. We now see the IVE and the IVW kind of doing the same thing, playing chicken with one another. And when Terry comes in and shows you the improving conditions in staples, utilities, and some of the other material sectors, there is the possibility that 22 looks a lot different than 21, but we're going to continue to take it one wave at a time. That's just something I wanted to present to you that we're going to be watching very closely with our members for that potential rally in value. So that's it for me this morning. Let's go ahead and pop back over to the trading analysis team. How are you guys doing?
Very good, Bennett. Very good. Good analysis. Yeah, I like the, more, I'm going to tell you more often than not, maybe those resistance lines turn into support.
Yep.
And in addition, like you said, in addition to using our fib levels, retracement levels, prior corrective historic pricing levels as support, also those are very key. So I mean, we can obviously find the support before we get there, but I do find a lot of times that's the case. So yeah, good analysis.
Yep, absolutely. I would, if we did get back into that zone, I would certainly execute with conviction. So let's jump into it. Terry's going to take you through the Optima platform, take you through a more in-depth overview of the rotation outlook, and we'll be back on the other side. See you guys in just a minute.
All righty.
Ready to rock?
Let's go.
All right, take it away.
Hello, traders. I'm Terry Long at tradinganalysis.com with your weekly sector focus. Welcome to a new trading year, but we are picking up where we left off. The index has remained just shy of all-time highs. I want to remind people of that. Now, on the last week of trading in 2021, the market saw a strong push higher on Monday, followed by a very quiet, low volatile trading week, with both indexes closing the year just shy of all-time highs. Now, the S&P netted about a 0.85% gain on the last week, while the NDX was much more subdued with only a 0.7% gain, essentially flat. Last week, the real estate sector was the top performer, moving up 3.35%, followed by utilities up 2.47, energy up 2.16, materials up 2.15. But laggards on the week were the communications and the consumer discretionary sectors with modest 0.55% declines. Let's fast forward and take a look at what's happening here this week. And with only two trading days already behind us, can you take a look here at the price action that we're seeing here in the energy sector? All right, so Monday we got a high open here on the S&P. We did see continuation to push in the markets from back up to the all-time high levels, up 0.64% Monday, and the NDX actually had a 1.1% gain on Monday, still shy of its all-time high. But Tuesday, the indexes retreated. The S&P was down slightly, but the NDX fell 1.35%, wiping out Monday's gain and actually putting the NDX slightly in the red for the weeks this so far. But over here, the energy sector continues its volatile ride, rallying sharply back from the corrective move, up over 7% this week. The financial sector also rallied back out of the gate, rising 4.28%. And on the downside were healthcare, real estate, utilities, and technology sectors. Now, the new year 2022 is starting out with the consumer discretionary, the technology, real estate, and the materials sectors all now in the leading quadrant. Now, the energy sector has actually pushed down here into the weakening quadrant. And when I was looking at this on Sunday, we still had this yellow weakening price trend in the energy sector. But that all changed, obviously, with the big rally. And it's very odd to see the hook actually turn to the right coming from down. So this may be a short-lived spurt. I would be interested if I actually saw the rotation rise back up here. I think that would be a little strange. Most of the time, these rotations are clockwise. So they complete themselves clockwise. They don't complete themselves anti-clockwise, okay, or counterclockwise. So I think that's kind of interesting, but relationship there. Now, let's see. One of the other things that I see here, further weakening down here into this financial, or into this lagging quadrant, is the financial sector. But, again, we had already rebounded 4%. Look here what's happened. The momentum decline has stopped, and we have a very short vector here, possibly indicating a hook back to the north. It's not complete, but the price action that we've seen has already made this big of an impact. Remember, these are weekly rotations. Okay, down here there is hope for a recovery. Appears to be swelling in the communications sector. It's been in a decline since September, but now we've got a new northerly hook forming. It's not complete. I don't call them complete really until I get back to a northeasterly heading. Up here in the improving quadrant, staples, like Bennett was saying, we got staples and utilities rising nicely here up into the improving quadrant. Actually, we might even be seeing a little bit of acceleration Yep, there's a little acceleration actually happening here in the staples sector. All right, so since it's a new year, I thought maybe we should take a look back at what the sectors were doing last year. So I'm going to zoom this chart out a little bit more so you can see everything, and then we're gonna take you all the way back. I'm gonna have to rescale a couple of times because of the volatility, momentum versus relative strength axis change here on us. So let's get this. So this is where we were at the beginning of 2021. We had financials in the lead, we had communications in the lead, maybe with a little hook, and industrials had just exited the leading quadrant. Technology and discretionary actually were pushing towards the lagging quadrant down here from the weakening. Staples, utilities, healthcare, real estate, they were all underperforming for sure. But the eye was here on the energy sector. So we all know how volatile the energy play was compared to all the other sectors. Energy was really the only sector that I would say had a wild swing in the markets. So a lot of the pundits like to say 2021 was a wild ride. No, it depends. If you were invested in SPACs maybe or energy, yeah, you probably took a pretty wild ride. But energy moved over here into the leading quadrant all the way up until, let's see here. We saw some momentum decline in the first quarter, but we got a really strong push late spring with energy and financials. And while this was happening, we had a really weak technology and consumer discretionary pair. They had hooked back, and they said they thought they were going to return back to the leading quadrant. They failed, and then they got rejected down into the lagging quadrant. Okay. So meanwhile, we've got energy with really high relative strength. Now that plays out by the end of April. By the end of April, we saw energy decay rapidly and push itself down into the weakening quadrant. Technology had pushed itself over here into the lagging quadrant. Real estate was actually the next play up. So the real estate sector moved on into the leading quadrant. Discretionary materials held into the lead. Energy financials continued to fade. And notice right about here, right about in mid to late May, we got the turn in the technology sector. Okay, and that turn continued to meander for a while. We got an improving vector, and the technology, like Bennett said, the growth over value trade turnover happened around May timeframe, and then from there on we saw technology recover, growth stocks outperform value stocks for the rest of the year. And then here's energy fading rapidly, pushing down here. I'm going to have to zoom out because it goes so deep there, all the way back down. Energy wasn't finished by September. This is mid-September. Sorry, I get my zoom there. The energy sector formed a new hook. Okay, whenever we see these new hooks forming, this is rotation. Sectors are always rotating. Don't listen to the guys on TV and say, "Oh, the reason for it is because we just started sector rotation." Sector rotation is ongoing every day of the year. Okay, but what happens is there may be more significant turns happening in certain sectors. Okay, so here comes the energy sector, a really rapid, high velocity push back up into the improving quadrant. And you can see, because I'm having to scale it out so much, the other sectors are not affected, not quite as dynamic. Here is the financial sector rallying again too, and then we see technology and healthcare and real estate fading. In communication sector, we're moving into October, November timeframe. This is where the communication sector just decided it was pushing down into the lagging quadrant. So the communication sector never really recovered from the September broader market decline. like the other sectors did, it failed to rally, and then it went ahead and still continuing to push down. And now here we are. This is coming back into December, and there's energy, but energy is rolling south again, meaning the momentum shift is fading, but now it's got, a higher relative strength. Okay. Here comes consumer discretionary. We're rounding out the mid-December, and then now a rapidly push lower. So you can see that just this week, okay, just this week is this tiny little vector. You don't see that in any of the rest of this move here in the energy, that slowing down or that change. So I kind of think this week's an anomaly there is what I'm saying. So energy has had this track record of very large, high velocity moves week over week. A little bit of a stall to me. That definitely signals something is changing, because we're not simply continuing the same pattern. Okay, but here the other thing I want to tell you about technology may be making and you can see how short the tail here is in technology, and that's a month, right? Each one of those line segments is a week. How short this line segment is at a high relative strength. So do not give up on your technology stuff just yet. Really, if we have to get out of technology, it's going to be when we start penetrating back down here across the weakening to lagging border. Right now, this is all of these stocks in discretionary, technology, even energy, materials, and real estate, along maybe with some staples. Staples is not a growth sector, but we are seeing quite a bit of opportunities in several stocks there in staples that may give you some positive gains over the next several weeks here. Okay, so that's all I've got now, Bennett. I'll throw it back to you.
Much appreciated. Thank you so much, Terry. Excellent work. Yeah, very curious to see what energy does there. I just tracked with our clients a 5-wave move down, and we've done 3 back into resistance. So we should have a good decision to be made there in crude oil very soon. All right, Mr. Alex, sir, you ready to jump in, take the screen, and take us through your macro outlook?
Yeah, let's go.
All right, here we go. We'll be back on the other side.
Hey guys, welcome to the 2022. Happy New Year, and let's review a little bit what is going on the macro level. We are going to look as usual 10-year yields, and we have been tracking this for the last couple of broadcasts, labeling this as a 4th wave and looking for yields to move higher. So there is a couple of options here as I mentioned before. So either this being some larger consolidation, definitely we are testing this 1.7 level now, and that is all due to the last 108 degrees turnaround from Fed for 2022. I really don't think they will hike 3 times. Definitely they will hike 1 time, because now it is already said. So they will need to abode of what they were saying. March may be the month where they're gonna stop the QE and raise rates for 0.25 basis points, and that is reflected on the yields moving higher. So in this case, technically, I am seeing a higher levels potentially if we break this 1.7, and our thesis was from the beginning that this move down was relatively corrective and that we are going to see a higher level in yields. The question is, will the yields cross this very crucial 2%, where we are going to have to switch to more impulsive wave count, looking even higher for yields? And that is left to be seen. I like to be a little bit more conservative on that front, taking into consideration everything what is going on in the economy. So I will go with the 1 rate hike for the first 2 quarters. And the move up in yields up to 2%, and let's see what will happen after that. So as you know, yields do not move as the other markets. They're relatively slow, which is understandable. So I'm going to go and look for higher levels from this 1.7 to 2 to 2.1%, where this A up down in B up in C actually reaches a measured move or equality. So in that respect, we are going to track a possible break of this level, maybe a little bit more consolidation. This even can morph into something else, but definitely I see yields moving higher. In the European front, as regards of the yields, we are looking for the price movements in the 10-year Bund, which is a German 10-year equivalent. On this chart, I have a price instead of yields, but they're moving inversely. As you can see here, as a price moving down, yields are moving up. So this chart is just a little bit more readable in regards of the Elliott Wave structure. So I'm seeing this as a fourth wave still. So we have from the beginning of 2008 a nice move on the upside, which actually reached its third wave highs. And here I don't see anything impulsive so far on the downside, so I will like to label this more as a complex correction, and it is completely natural that the wave 4 actually goes out of this very nice trending channel on the upside. So I will look higher in yields also in Europe, although ECB is relatively very status quo in that regard. So we will see what will happen in the next meetings with the inflation reading. But I will look this to continue on the downside. Most likely we are still holding this support at 169, but most likely this will be penetrated to the downside. This is my support zone. I do think this will unfold in 2022 and maybe the beginning or half 2023. We might continue up in deflationary cycle, potentially if the economy balances itself and the higher forces of demographics and technology kicks in, or we might see some global geopolitical event which will force the central banks to go back to expanding its reserves, or in the other words, they're gonna switch again to the QE scenario. So for now, this scenario that we exposed even in the beginning of 2021, it's working pretty nicely, so no need to change it. I would like to look next dollar index. So dollar index is still tracking our wave count from the beginning of the COVID crisis, 5 waves down with a small truncation, up in A, down in B, and 5 waves up in C. This looks like a small consolidation. Are we going to finish this in the next month or two with a small pop-up up to 97, or are we going to extend to 99, 100 level? That depends, I think, on rates. But I do see possibly in the second quarter or even in the end of the first one, dollar rolling over, but of course I will see confirmation for that. I see signs on many other currencies that we might see dollar lower in some part of the 2022, and I'm just curious to see when this 5 waves up completes. We will watch this very carefully, because if we see 5 waves down, that will definitely give the indication that dollar might continue very hard lower in 2023 and 24. So this scenario also is working for now. We have been tracking this for a long time, and for now it plays out pretty much as we were looking for at trading analysis. I would like to present you my wave count on oil. Terry was speaking on oil with Bennett as well. This is a longer term wave count. So from the pretty much high prices before the first GFC in 2008, I count this as a 3 waves down with a potentially 3 waves up in A, 3 waves down in B, and this is a Brent crude oil. It's not US light crude oil. I use this because of this big spike in the futures that we have seen in May of the last year. It simply works better because this was just an event which I will shrug off in the sense of this price movements reading on futures. So I will take this as a 3 waves up, 3 waves down, and I'm looking this for a higher oil prices. Up to this, one of the ratios, we look for a possible flat. So when you're dealing with a couple of forms that might actually unfold in a complex corrections, they can take several forms, and each of these parts of these corrections can also take a couple of different forms. So here I will dare to structure this as a flat. As you are seeing, we are stopping exactly at this channel line, which goes from 2008, and we are starting to consolidate potentially here. This might be a small triangle in making or something like that. So I will be very keen to watch. Will oil will actually make a sideways movements here, and whenever you see a sideways movements and not decisive downside, when you are actually facing the higher time frame borderline or a trend line on the upside, that will actually indicate we are just consolidating before a move higher. And that is actually this chart depicts. So if I see a consolidation continuing here, I will look for higher levels in oil. My target in regards of these levels that we use for a potential flat, as you can see, this is the 127 ratio, which will exactly met here when we project extension from this wave A. Small spike is always okay with this measurement. And I will look the same on the upside. Actually, this will put oil prices going very high, up to above $130. Which is a kind of a brave prognosis in regards of the oil chart. But if I see oil price starts to go above this channel after a small consolidation, that will definitely be in hands, probably due to some geopolitical event or even a further decisions made by OPEC or who knows what will be the fundamental reasons. But as long as we stay in this sideways consolidation, I will look for oil to break this channel on the upside and even continue higher, from where I will see a further move down, which will make all of this as a W up in X in a flat. So this is a 3-way move. This is also a 3-way move, but in a form of a flat. And then I will look for another 3-way move down as we close to 2030. So this is a really long-term analysis, and definitely we will track this for you in the next broadcast on our channel. So this is my scenario, how I look potentially technically oil can unfold. So let's go and see what the gold and silver is doing. So we have been tracking these metals for a long time now. We are still looking for a potential triangle. This B wave is extending a bit, but I'm not thinking that we're gonna cross potentially this resistance line. So for now, this triangle is unfolding nicely. Some surprises are possible, but this will still be my primary wave count, where I can see one more push down lasting for a couple of weeks in gold, and then from there we might be at the end of the wave 4 and starting a new cycle on the upside in gold. Because all of this, however you structure it, however actually you determine to label this, all of this is corrective, because we don't see a decisive impulsive move to the downside. So we usually, when we observe this type of consolidation, label it as a wave 4 in one form or the other, which means that the trend on the upside will continue. For any case, I have a little bit more bearish, but not much. This is also a possibility that we are in some type of an X wave and we prolong this move down towards April, May, which actually agrees with some of the wave counts we have on a Bitcoin. And they might go together in synchronicity on the upside. So that's also a very interesting thing. So this is just a secondary scenario, and I will go for this only if we break this support around 1672. So for now, I don't see any reasons why would we have an exposure on the long side yet on the gold. So consolidation still continues, and we have to be patient until market tells us where this consolidation will actually complete. With silver is a similar situation. So we are tracking this wave count where we are looking for one more move lower in this C wave. So this is a 5 waves up from these lows, A, B, C down in W, some type of an X wave, or even potentially a triangle in X wave, and the move down to this 17, 18 levels. From where we might see a first move on the upside in 5 waves, which will actually signify the silver moving up. So I think commodity currencies definitely, after a small pullback in the beginning of the Q1, will be bullish in the Q2, Q3, and Q4 of 2022, and especially gold and silver, and eventually most likely Bitcoin, which will be the subject of our next view. So we were pretty much bearish on Bitcoin, announcing a crypto winter from March 2021. Market was very bullish at that time, as it was looking this run from from June or July to August, September. But we also warned our members that potentially this might be just a B wave and we're going to continue lower, which exactly happened. So the same narrative and sentiment is happening every time in the this pretty much volatile crypto markets. As you can see, these levels here around 3,000, we also called as a bullish development, looking this as a 3-wave correction back in the end of 2018. And this 200 moving average on weekly was kind of holding nicely. As you can see, these potential lows, we have a small spike here, but that's completely fine. So we do look this as a longer-term consolidation in a wave 4. There is a couple of options. In my view, there is 2 options. I like to be a conservative. So I would look for a triangle. Flat is also possible, touching this 22K, but that will be a really exaggerated to go for that option in this moment. So I will stay with the triangle, which is nicely developing now. This might be a complex C wave. Usually you will see one of the legs in triangle to be very complex. So this can be an ABC, some type of a consolidation in X. So 30K and 40K stays as a very good support levels for the Bitcoin. As you can see here, so 40K was already almost touched on this move down. And as sentiment changes and Bitcoin starts to be in many of the crypto bullish sentiment now turning bearish, I'm already looking where should I establish my bullish position on a Bitcoin when this sentiment or a bearish sentiment reach its most negativity regarding the Bitcoin. And we are in the middle of that. We still didn't reach that point, but I'm very much observing the sentiment and how it switches to bearish side, which is already a warning to me, and to look carefully what is going on here, because I want to be positioned on the other side of the bearish sentiment once when I think technically and fundamentally it reaches its peak. So Elliott Wave is actually a tool when you can catch the swings of most positivity and negativity and actually fit in with your technical analysis. So if you want to see more on cryptos, I'm gonna air tomorrow Crypto Lab, first Crypto Lab in 2022, and most likely we are going to roll out a public webinar on the Bitcoin, so be tuned for that. We will be dealing with lots of things on a Bitcoin chart, and I will explain that much more in depth and the options very soon. So stay tuned, and back to you guys.
Thank you so much, Alex. Much appreciated. Yeah, very curious to see where Bitcoin ultimately goes. You know, I loved it earlier in the year when we were coming up to that 60K handle, 65K, and everybody was expecting a direct expedited move to 100,000, and you threw out that resistance and suggested that wave 4 could set in. So job well done, team. Excellent work. Members,
Yep.
we'll see you in about 24 minutes.
One more thing, Bennett.
Yeah, of course.
I had another thought I wanted to just express, you know, as I was animating that rotations for the last year. You guys might think that that was nothing more than an entertaining exercise. But what I see in the rotations are characteristics of motions that provide me clues as to where to focus our trading attention for the upcoming year. Bennett and I leverage the power of relative rotation graphs with Elliott Wave theory to enhance our trading plans for our clients here at tradinganalysis.com. We'd love to have you guys join our growing subscriber base. Please check us out at tradinganalysis.com/subscriptions for more information. That's all I've got now. Welcome to 2022. Ready or not, here we go.
We're in it. We're in it, baby. We've got 5 days in here, and it's gonna be a fun one. So very well said. Yeah, if you guys are curious and would like to check our services out, please visit us, tradinganalysis.com. Heck, if you just enjoyed the content, please give it a thumbs up, subscribe with notifications to stay up to date. We've got a lot more in store for this year. A lot of things we'll be rolling out. So team, excellent work. Terry, Alex, appreciate it. We'll be in our member webinar in about 22 minutes. Markets are open. Markets are fairly quiet to start the session. Keep your eye on that NASDAQ chart. I do think the NASDAQ chart, NASDAQ 100, not composite, will be the best guide moving forward. Sounds good. Thanks again. And we'll be back next week. Terry, Alex, take care, gentlemen. We'll see you guys on the next one.